Hey everyone, good morning. Welcome to our Sunday Morning Explainer. Today is June 21, 2026, and we are kicking off the day with a really high-energy briefing on the most critical tech horizons shaping our world right now. I absolutely love taking complex, rapid-fire news and breaking it all down so we can really see the bigger picture. Today, we are diving into 6 massive stories across crypto, space exploration, and cybersecurity that will directly impact your personal and professional strategies. I mean, from a historic exodus in the Bitcoin market to a literal rescue mission happening up in orbit, we have got a lot of fascinating ground to cover.
Okay, so here's our roadmap for today. We're going to start with turbulence in the crypto market, followed by the big gamble on Bitcoin. Then, a rescue mission in space, a red alert in cybersecurity, and finally, hackers in your earbuds.
All right, kicking things off with Section 1, Turbulence in the Crypto Market, specifically looking at institutional flight.
So over the last 30 days, we've seen this absolutely massive, undeniable shift in institutional confidence hitting the Bitcoin ETF market. The big players are completely reassessing their strategies, and it's resulted in a $6.35 billion net outflow. According to verified data from Galaxy Research, this is literally the largest capital flight we've seen since spot ETFs launched back in January 2024. And it hasn't happened in a vacuum either. This massive exit coincides exactly with a 17% drop in Bitcoin's price over the exact same period. Institutional portfolio managers are looking at Bitcoin sliding from its March high of $85,000 down to below $65,000, and they are just having a really hard time justifying keeping such a volatile asset on their books right now.
To really see this, let's track the timeline. Back in October 2025, cumulative flows actually peaked at $63 billion. But because of this recent sell-off, which was driven really heavily by pension funds and hedge funds desperately needing to reduce risk, that cumulative total has plummeted to $53.4 billion. The bleeding was definitely the most severe between May 15th and June 3rd. That was a brutal 13-day streak where $4.4 billion practically evaporated from these funds. But notice that very last time frame. Between June 4th and 5th, the streak broke with a tiny $3 million inflow. So, the selling pressure might actually be exhausting itself, kind of hinting that we could be nearing a price floor.
So why the sudden panic, right? Well, it really boils down to a tale of two economies. On one side, the Bank of Japan just raised their interest rate to 1%. That's a 31-year high for them. But simultaneously, they stopped their bond taper, which essentially softened the blow. Bitcoin barely flinched at that. But then look at the U.S. Federal Reserve. They held rates steady, between 3.5 and 3.75%. Signaling no immediate rate cuts. When the Fed keeps money tight, institutional capital just flees risky assets like Bitcoin and runs straight for high-yield, low-risk U.S. Treasury bonds. Whether you actively hold crypto or maybe just a standard retirement portfolio, this matters to you. It proves that U.S. liquidity, the mighty dollar, truly dictates the heartbeat and attractiveness of global markets, not Tokyo.
Which brings us right to Section 2, the big gamble on Bitcoin and strategies accumulation.
While all those institutions are sprinting for the exits, Michael Saylor and his company's strategy, they're doing the exact opposite. Talk about diamond hands, right? They just spent another $100 million between June 8th and 14th, scooping up 1,587 more Bitcoin at an average price of $63,024. This brings their total holdings to an unbelievable 846,842 Bitcoin. They are the single largest corporate holder in the entire world, just completely defying the current market panic. To put that into perspective, at current prices, that massive holding is worth $56.1 billion. Just think about this for a second. Back in the really dark days of the late 2022 crypto crash, when Bitcoin fell below 16 grand, a lot of analysts thought Strategy was facing imminent bankruptcy. But instead of folding, Saylor actually raised capital and bought hundreds of thousands more coins. This is just a massive, historic corporate turnaround.
And here is the absolute crucial point. The so what of it all. The result of this unshakable conviction is a $48 billion safety cushion. By aggressively holding and buying through those brutal crashes, Saylor built a massive buffer over his company's debt. They're in such a financially dominant position now that even if Bitcoin's price totally collapses to $40,000, the company remains entirely secure. It's honestly an absolute masterclass in the power of a long-term strategy, especially when you contrast it with the short-term panic of the ETF managers we just talked about.
All right, let's completely shift gears for Section 3, rescue mission in space, catching the Swift telescope.
We're moving from the digital financial frontier straight to the physical one up in orbit. So the Neil Gehrels Swift Observatory was launched way back in 2004 to observe gamma-ray burst. Today, it is falling toward Earth at an alarming rate, and it's predicted to burn up in the atmosphere by the end of 2026. But NASA isn't giving up on it. In September 2025, they handed a $30 million contract to a Flagstaff-based startup called Catalyst Space Technologies. In an absolute record-breaking turnaround of just 9 months, Catalyst designed and built a robotic spacecraft called Link. And the big day is coming up fast. June 27, 2026 is the scheduled rescue launch.
The actual mechanics of this, it honestly plays out like a sci-fi movie script. First, Link is going to launch on a Pegasus XL rocket. Second, it literally has to physically chase down the Swift telescope in orbit. Third, and this is the absolutely crazy part, it has to connect using 3 robotic arms. Swift was never designed for servicing. It has no docking ports. It's essentially an uncooperative tumbling target. Finally, step 4. Once clamped on, Link will fire its engines to boost Swift to a safe altitude. If this robotic space tow truck succeeds, it completely revolutionizes the commercial space economy. It proves we can actually affordably rescue, repair, and upgrade multi-million-dollar investments instead of just letting them burn up in the atmosphere.
Okay, bringing the stakes back down to earth for Section 4, Red Alert, Cybersecurity, the North Korean NPM attack.
Looking at the digital supply chain we all rely on every single day, the speed of this attack is genuinely terrifying. On June 19th, Microsoft confirmed with high confidence that a massive attack on the Mastra AI ecosystem was executed by Sapphire Sleet. That's a North Korean state-sponsored group. Look at this timeline. On June 17th, hackers took over a compromised inactive account named Ihindero. Then, in a tiny 88-minute window, they pushed out 144 malicious packages right into the Mastra AI ecosystem. For context, that's an ecosystem that sees 1.1 million weekly downloads.
So here's the anatomy of the attack. How did they actually turn a software ecosystem into a targeted weapon against the finance sector? Step 1. Typo squatting. They created a totally fake package called easy-js, mimicking a popular real package. Step 2. Phantom dependency. They injected this malicious package as a dependency into 141 legitimate Mastra packages. Step 3. Payload execution. When an unsuspecting developer downloaded the infected master package, it quietly installed a remote access Trojan, establishing a command and control connection. Because Sapphire Sleet specifically targets crypto exchanges and banks, just a single infected developer could give North Korea a bridge straight into the major financial networks where your money sits.
And that leads us perfectly into Section 5, Hackers in Your Earbuds, the Apple Beats Flaw.
This is, without a doubt, the most personal threat on our list today. This exploit relies on a flaw in the Aeroha Bluetooth SDK, which is a chip used in over 30 different wireless audio products. Here is the terrifying 3-step sequence. First, a hacker within 10 to 30 meters of you can impersonate a previously paired device, even if they've never connected to you before. Second, due to bad authorization in the firmware, your earbuds allow an unauthorized connection, entirely bypassing your consent. Third, once connected, the hacker gains complete access to your microphone to listen in on your conversations, and they can even pull your call history. Guys, someone sitting at the next table in a coffee shop could literally be listening through your own headphones.
Now, Apple just patched this specifically for the Beats Studio Buds on June 16th, but hundreds of thousands of other devices are still totally vulnerable. You really need to protect yourself right now. First, if you have Beats Studio Buds, install firmware 1B211 immediately. Second, if you use other wireless audio brands, definitely check their sites for Aeroha product updates. Third, turn off your Bluetooth when you aren't actively using it. And finally, go into your settings and delete old, unused pairings. Do not leave those doors open for hackers to impersonate.
We've covered a massive amount of ground today. I mean, from billions of dollars shifting in the crypto markets, to robotic arms catching satellites in space, to state-sponsored hackers hiding in our software, and local hackers hiding in our earbuds. It all really culminates in this provocative question. If our headphones can covertly listen to us and our trusted software code can betray us in an 88-minute window, is digital privacy just a comfortable illusion in 2026? It's a pretty heavy thought to leave you with, but understanding these horizons really is the first step to navigating them. Thank you so much for joining me for this explainer. Stay secure out there, and I will see you next time.